Alright, so in today's part, I'm going to talk about the difference, what differentiates the consistently profitable trader from the typical losing trader. Okay, the major difference between these two is in their thinking, the way they think when they are trading. And I'm going to try and go through the thought process between these two school of thoughts right now, and you guys will see. Then you can actually categorize yourself and see if you are in the category of the consistent trader and the losing trader, or the losing trader. Okay, so let's go into the let's take for example a trading strategy. For example, you let's say your trading strategy involves trading double tops and double bottoms. On my chart right now is a double top formation right there, right? Let's say this is your strategy, and let's say your rule for trading this is whenever the market breaks and closes below here, you sell. Then your stop loss maybe is in the middle. Then you target here or 2 times your risk. Okay, now this is how the consistent profitable traders think. Okay, whenever they see a such a setup, let's say they are still, let's say the market is still has just formed this market has just formed this side of it, and the other side has not been formed yet. Now this is the thought process of the consistently profitable trader. Once it closes below, he will ask himself, is there an edge? Is there an edge? What does that mean? Will I make money if I trade this same setup 30 times? If the answer is yes, he will take the trade, put his stop loss, and put his target. Note that his reason for placing this trade is because he perceives that there's an edge there. Meaning he perceives that after 30 trades, he's going to make money. Okay? His reason for entering the trade is not because he thinks the trade is going to go his way or against him. Okay? So he doesn't actually care whether the trade goes against him or not. Rather, he's only interested in the edge. Okay, this is an edge. He has already backtested it maybe in the past 6 months, and he found out that this thing made money. And what is he doing? He just sees this setup, he clicks his sell button. Since there's an edge, he puts his stop loss, he puts his target. He doesn't care whether stop loss get hit or target get hit. He's not thinking that way. He's not thinking, okay, is it going to go my way or not? He's thinking, is there an edge? Once there's an edge, he clicks his sell. His reason for entering is because he has an edge. Now, let me tell you guys what the other trader, the losing trader, think about. Let me use pink for the losing trader. Now, let's say the losing trader finds the same setup, right? He finds his entry here. Now, the losing trader's thought process is, will this thing go my way? Will it hit stop loss? That is the only reason why he will place that trade. If he's very sure that it will go his way, that is when he will place the trade. Do you understand? The losing trader is trying to avoid losses, but the winning trader is just placing his trade based on an edge, based on a strategy that he has backtested in the past. He doesn't care whether the stop loss gets hit or not. Okay, so the losing trader is like, okay, I will sell here because I know the market is not going to hit my stop loss. Or he will wait until the market comes back because he thinks, he's very sure. He will wait till the market comes back to retest because he thinks once it gets here, it will never go back up anymore. Meaning the losing trader is not thinking in probability. He's not having a probabilistic thinking. Okay. Like I told you guys in the previous parts of all these discussions, you need to think in probability. Okay, because 1 million things could happen here. Okay, when let me use black now. When the market got here, if you had entered a sell there, 1 million things could have happened. It could have gone up, hit your stop loss, then go down. It could go down a little bit without hitting your TP, goes up and hit your stop loss. It could play around here, range, hit your stop loss. It could go range before going down. So there are literally 1 million things that could happen. Okay, now the winning trader, that is the professional trader, is not thinking about the outcome of this trade. Rather, he's only thinking about, is there an edge? Once there is an edge, he places his entry, he places his stop loss, and he places his target. Market has nothing to do with P and L, which profit or loss. Okay, so whether it hits your stop loss or hits your target, it doesn't mean, because you are still going to place, because after placing this trade, after this one trade here, you are still going to place another 29 trades. You still have 29 trades to go. So this profit you made here, or whatever loss you made here, really doesn't mean a lot. And you compare it to the remaining 29 trades that you're still going to take. Okay, because even if you made a profit here, you could in the next 3 trades have 3 losing streaks, and it will eat into the profit. And what does that have to do with winning or losing? Trading has nothing to do with profit or loss, P and L. It has everything to do with, have you backtested your strategy? Does it have an edge? And can you trade it exactly how it is? Okay, not trying to do any funny thing in the market. Okay, because a lot of traders, they just come to the market, they've studied all these things, they've studied double top, double bottom, they just come to their chart, they place trades randomly, they think the pattern is going to predict the future. The pattern is never going to predict the future. The market does not care about this your pattern. The market does not care about your pattern. It doesn't care about your entry, your stop loss, or your target. It doesn't care about you. The market is just doing its thing. Okay, so the reason why it went down here has nothing to do with this pattern here, the double top. The double top is just telling you that there is probability, there's high probability that sellers are in the market, but it's not telling you exactly what they are going to do next. Okay, so when you find your entry there, let me go back. When you find your entry there, you put your stop loss with your target. That's all. There's no any other thing to do. There's no any prediction you can do from here, because nobody knows what will happen next. Even if you are a prophet, if you are a witch, or you are a wizard, there's no way to know what will happen here. Anything can happen. Okay, because you are not a market maker. You are not the owner of that market. Unless you have trillions, maybe $3 trillion that you are going to use to move the market, then yeah, you know what will happen. But with your $100, $1,000 or so, the market does not even care that you have that order there. So why do you think you know what will happen next? Okay, it went down because those traders who were selling it decided they wanted to push it down. They wanted to take their profit a little bit, then push it down here. There is no technical tool that would predict this behavior here. The technical tool will only tell you that there's high probability that those sellers are coming in, but it will not tell you their next move. Okay, so this is it. This is the difference between a profitable trader, a consistently profitable trader, and the trader who is trading for excitement. Okay, so like I said, the consistently profitable trader has an edge, and he's just coming to the market to play that edge. Okay, he has an edge. He's just interested in playing that edge. The losing trader, on the other hand, is only interested in hitting target or stop loss. He's placing this trade because he thinks it's not going to hit his stop loss from here. Okay, if he's not sure, if assuming he thinks it's going to hit a stop loss, he will not place that trade. That's how a losing trader thinks. But winning traders don't think like that. Once they have an edge, they enter without any fear or hesitation, because market doesn't care, you know, because it's random from here. The only reason why you should enter a trade is because you have an edge. Okay, because anywhere you enter, it's random. It's random. You can't be right or wrong. Don't enter a trade because you think it's going to be right, or you think it's going to be wrong, or it's going to hit stop loss. The only reason for enter a trade should be because you have an edge in that trade. Okay, so that is it. So when you open your chart, you will see many double tops, many double bottoms. A lot of them doesn't have an edge. Okay, so you test all of them, you find out which ones has higher probability, and you trade those. You leave out the other ones that doesn't have an edge. Whereas a losing trader will trade everything and think the pattern is going to move the market. No, you're only trading. You're looking for places where there is an edge. The pattern itself doesn't mean anything. Okay, the pattern itself does not mean anything. Okay, so that is it. Like I said, the patterns, they can be the same, but their outcome will be different. Okay, you can trade 30 of these and all of them will look just like this one here, but when you look at the outcomes of each of them, you see they are quite different. They won't look like this outcome here. Okay, so that's why you need an entry, you need a stop loss, and you need a target. Okay, again, another mistake the typical trader makes is, let's say he finds this trade, place it, sell there, because he thinks the market will not go back up. He will full margin there, you know, and on that retracement, he will blow his account. On this tiny retracement here, he will just blow that account, blow it up. It's blown. Okay, because market doesn't care. Market doesn't care about your entry. Okay, so yeah, so that is it, guys. So yeah, so I'm going to stop here, and maybe tomorrow we're going to continue with another part of the series where we'll go more into the deep aspect of it. Okay, so do have a great one.